It's time now for a look at some of the day's top business stories, and I'm joined in the studio by France 24's Cole Stangler. Cole, you're starting with Japan's SoftBank. Its shares posting heavy gains today.
Yeah, that's right, Haxie. A day after the bank actually reported fairly weak quarterly earnings for SoftBank. It posted losses due to China's crackdown on the tech sector and investments made by the bank's venture capital wing. But the lender is recovering nicely today. Shares up a staggering 10%, and all thanks to a long-anticipated buyback program. SoftBank announcing it's ready to spend up to $8.8 billion repurchasing its own stock. That's about 15% of the company's shares. Well, European markets posting some slight losses at the open. Shares in Paris, London, and Frankfurt all in the red. CAC 40 down about 0.4%, as you can see here. Investors anxious ahead of a key inflation reading coming out of the U.S. tomorrow. Turning now to the Asian markets, some slight gains in Shanghai and in Seoul, although the Nikkei finished in the red here, despite those gains we're talking about for SoftBank. Concerns over debt in the Chinese real estate sector really weighing on investors. More on that in a moment. Over in the somewhat parallel world here of cryptocurrencies, Bitcoin hitting a new record high, trading at nearly $68,000. Fears over inflation, among other factors, helping to boost the coin's value. Well, next to Australia, the country's heavy carbon footprint has been in the spotlight as the UN climate summit rolls on. As that scrutiny grows, the government has a new plan to boost sales in electric vehicles. It's pledged some 114 million euros to help roll out new hydrogen refueling and charging stations. For critics, it's not enough. They say tax breaks and rebates should also be part of the solution. But Prime Minister Scott Morrison says that's out of the question for Australians.
We're not going to tell them what to buy. We're not going to tell them where to drive or where they can't drive. We're not going to tell them how to live their lives and interfere in the way of life that they have. We're not going to put their petrol prices up to make them buy electric vehicles or do anything like that. Australians will make their own choices, and we're going to facilitate those by putting in place the infrastructure that enables them to make those choices into the future.
Well, next up, a think tank led by China's powerful state council met with real estate developers and banks today. They discussed concerns over a growing liquidity crisis in the country's property sector. Crisis that, as Catherine Viet explains, goes well beyond the most high-profile firm Evergrande.
Selling assets to stay afloat. Cash-strapped real estate giant Evergrande has sold its 5.7% stake in Hang 10 Networks Group, a media firm that operates a streaming platform. The property developer must come up with $148 million by Wednesday to avoid defaulting on a bond interest payment. The company is drowning in some $300 billion in debt, yet has so far avoided defaults by making overdue payments just before the 30-day grace periods expire. Still, Evergrande's problems are just the tip of the iceberg in China's real estate sector.
I would expect more smaller Chinese property developers. They may follow their footsteps. They may not be able to pay the repayment of financial products as well as US dollars denominated debt as well. So I would expect more and more Chinese property developer follow up.
While Evergrande may be carrying the biggest debt load, Kaiser Group has also been in the spotlight recently. On Friday, trading in the company's shares was suspended after payments were missed to a wealth management product guaranteed by the firm. In a statement, Kaiser pleaded for investors to give it more time to raise the necessary cash. The spreading liquidity crisis in the country's real estate sector has also rattled global markets and even prompted the U.S. Federal Reserve to issue a warning that the financial stresses on China's property developers could pose a risk to the U.S. economy.
And finally, the interest of the super rich in space shows no signs of abating. Virgin Galactic says it sold another 100 tickets on board commercial flights set to begin next March. That brings total sales up to 700 tickets, with the firm benefiting from founder Richard Branson's flight over the summer. Virgin also says seats are selling faster than anticipated thanks to strong demand, and despite a price of $450,000 per seat, though, Haxley, worth stressing actually less than what Jeff Bezos' firm Blue Origin is charging. They sold their first seat at auction for $28 million.
Time for us to start saving, Cole.
Yeah.
Cole Stangler with a look at the day's top business stories. Thank you very much.